VM brings AI into the physical world. At the New York Islanders UBS Arena, VM showed us its new tools in action.
Everyone has had the experience with kids or by yourself. You're at a game and you need to go to the bathroom, you want to get a beer, you want to get a hot dog, you want to get back to your seat as fast as possible. How do you make that happen? So this is all about making the fan experience at games as good as it possibly can be.
VM's technology uses AI software and computer vision to analyze data captured by existing security cameras to calculate wait times at bathrooms and concessions, and send real-time updates to fans through its Quick Queue platform. The technology, which is built into the existing Islanders app, also allows fans to search food offerings and see where vendors are.
If you could sit in your seat and identify exactly where you're going to go so you're not walking out to the concourse looking around and trying to figure out what's being served where or what bathroom is the most efficient one for you to go to, that improves the experience all around.
Though VM's tools just launched this fall, fans already use the app an average of 3 to 4 times per event. And arena management is working on ways to deploy this technology to help with traffic and rideshare pickups. This is part of the live events industry's embrace of AI to improve fans' experience, from preventing ticketing fraud to customer support, to AI-powered cameras to track athletes' movements. Another AI company, AFI, is deploying its cashierless concession technology at 17 sports stadiums, including the Los Angeles Clippers Intuit Dome, which opened last year. This arena features over 40 cashierless concessions and stores, using AI-powered facial recognition to allow fans to grab items and go, getting them back to their seats faster. Other arenas are showcasing robots taking over bartending duties. At last year's MLB All-Star Game, the Texas Rangers Stadium debuted a humanoid robot bartender built by Rich Tech Robotics. It's serving cocktails full-time this season. And VM just debuted its own robotic arm to demonstrate how it can pour drinks, though the company says it's not looking to replace bartending jobs.
It's finding the glass over here, make sure it knows exactly where it is, making sure there's no obstacles around, no kids in the way. Now let's go ahead and picking up the bottle of white wine. It's going to bring it over here and weigh it to know exactly how to get a perfect pour. And then it will go ahead and hopefully get a perfect pour of wine.
VM hopes in the future it can combine its AI camera technology and its robotic arm so fans never have to leave their seats to get a refill.
And so I've been arguing for weeks now that tech trumps tariff because there is a revolution coming from AI and those an industry of the future. It's AI, robotic, automation, semiconductor, fintech, defense tech, green tech, ag tech, you name it, space exploration, quantum. These things are going to increase U.S. Potential growth from the current 2% to a level I expect by the end of this decade closer to 4%. So 200 basis points increase in productivity growth. Instead, even in the worst scenario on trade and restriction to migration, and we're going to de-escalate, the potential hit to potential growth could be maybe 50 basis points. So the ratio between 200 basis points up because of technology and negative 50 basis points is 4-1. So tech trumps tariffs. And therefore, the U.S. American exceptionalism is going to remain in spite of bad trade policies, in spite of bad migration policies. So in that sense, I'm optimistic that not just in the short run, but also with the medium term, we're going to avoid a severe recession and you're going to remain strong.
To modernize infrastructure for financial institutions. So the thing is it's not realistic that the existing systems like banks are going to plug directly into the blockchain. They do need some connective tissue. That's what we provide. So what does infrastructure mean? It's things like getting from real world currency, fiat currency into digital asset currency. Those are on ramps. The inverse would be off ramps. Secure custody. It's providing stable coins and even services for the institutions to be able to tokenize assets. So it's providing that layer of services that they need. In addition, the whole company started because 3 developers created the XRP ledger, which we were talking about. And so we've always had a belief in building use cases that would make use of the efficiency within XRP ledger. So the set of services I'm talking about and the use cases that financial institutions would use would be, presumably on this ledger.
That the U.S. and China have held trade discussions. China's embassy just said they are not having any talks on tariffs and that the U.S. should stop creating confusion. Now, just a bit of a reminder, this Time magazine piece came out literally at 6 a.m. this morning. It was an interview with President Trump. That interview, though, took place apparently on Tuesday. So here we are on Friday. It's been a roller coaster of a week, and so many different things have been said, both by the president and his Treasury Secretary, Scott Bessent, and others. But the one thing that has been consistent thus far is that China, at least publicly, has said that there have been no talks whatsoever. And of course, there's also the IMF meetings where China is in Washington now. So if there were a possibility of such meetings, you'd think they'd be happening. Doesn't seem to be the case, unless there's something else. Unless there's some other theater going on.
Yeah, I wonder if there are low-level talks that are taking place, because I think the Chinese ministry in the past has emphasized there are no high-level talks taking place.
But this idea that Trump is saying publicly that she called him, President Xi called him, suggests that they would be talking. Right. And here you have the Chinese saying that's not the case. Now, they didn't specifically say that President Xi didn't call him.
Right.
But what this all means, I think, is still
maybe it's talk versus talking. Lots of ways to cut through that. But obviously, the markets are listening to everything that's been said since that Time magazine piece came out.
Tariffs are clearly important, but it's much more of a dollar story right now for emerging markets. And what we're seeing is really a reversal of a multi-year, decade-long monotonic rise in the dollar. And that's providing a boon to emerging market economies. Over the past decade or so, what we've really seen is the US spend a lot of money running very large persistent deficits. The rest of the world have been saving, running big surpluses, and those surpluses have been recycled back to the US economy, and that's pushed the dollar up and it's pushed US asset prices up. But really, since Liberation Day, we've started to see a reversal of that trend. And that's really marked by the decline of correlation, or the negative correlation, between US assets and the US dollar. Really, it's a very rare event. It happens in less than 4% of the occurrences. But as the US equities fall and the dollar fell, for an international investor, that's an incredibly painful experience because they lose on both sides of the ledger. So really, for the first time in the best part of a decade, investors are really having to think about diversification, which assets that they own, how many dollars do they own, and emerging markets are coming into the conversation once again, and they come in at a great time where balance sheets are very healthy and it's fundamentally an under-owned asset class.
It sounds like you're convinced that this Sell America trade, as we've been calling it, isn't just a blip, that it's the beginning of a new era?
Yeah, I think it's ultimately a paradigm shift, and these paradigms, they take time to formulate. If you go back to the mid-'80s, the dollar cycle was a 25 to 30% move. In the early 2000s, something similar as well, about a 30% move. We've moved about 5 to 7% so far. This is probably consensus in the fact that people are talking about it, but it's not overly subscribed. And this has been 2 decades of build-up of positions whereby the MSCI world comprises about 70% US corporations now. The whole world is long US assets, in particular US equities. And it's really that need to hedge and really rethink the overall allocation to US equities, which is happening right now. And it's not just equities for emerging market equities, it's how many equities do we want in a world where growth is going to be structurally lower, in this multipolar world that we, as we call it, where we think that it's going to be sort of not just an America first agenda, but a UK first, a Europe first, a Japan first, and so on and so forth. That brings down the headline level of growth. In that environment, you want less equities, you want more debt, you want less dollar assets, you want more international assets. It's about diversification. That's the only free lunch that you get in money.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you join the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have AI and robotics coming to stadiums. We have VM. And guys, we know while people are having fun, they'll never notice the technology. And what are they selling? Convenience. But you're giving up all your privacy for convenience using facial recognition. And while you're there, they're going to be collecting all your data. So they know you better than you know yourself. And that data is definitely going to be used against you. And remember, the crypto teacher told you. And Robini talks about all the technology that's coming. Tech trumps the tariffs. And it's all about productivity growth. And I have to agree with them because remember, these machines don't need a break. They work 24/7. They don't call out. They don't need insurance. And they definitely don't talk back. And remember, the crypto teacher told you. Now we have Ripple's Monica Long speaking about the current banks. They don't have the technology, and that's the reason why they're going to use these digital assets, their technology, plug it in to the legacy bank, so therefore they're on blockchain. And don't forget what Gary Gensler stated. These big banks are not going to allow you to take over, but they'll definitely use your technology. And we are already seeing that. The big banks and big corporations funded crypto from the beginning. And remember, the crypto teacher told you. And we have the Chinese embassy says that they haven't spoke with the White House. And guys, remember, Scott Bessent just told us himself that it's going to take 2 to 4 years to get a trade deal. And we know by that time, the fourth industrial revolution is going to be here. And that's the reason why we're seeing so many countries moving away from the dollar, and it's only going to pick up. Remember, this is a plan. It moves in phases, and the U.S. has to refinance $10 trillion this year. At the same time, no one wants this paper. And the emerging markets right now are looking good. And the fourth industrial revolution, we know, rises in the east. And remember, the crypto teacher told you. And we have tariffs are slowly changing the supply chain, and China moving goods to the emerging markets and the mainland. And that's going to affect the United States and all the products that we normally see. Yes, it's going to take a few months, but the United States is definitely going to feel the pain. And again, this is a plan. It moves in phases. And we have consumers right now are hurting. You can see it in these major restaurants because they're empty during the week. They used to be full the week and the weekend. And then also fast food lines are starting to be wrapped around the building. And grocery stores are full until Friday or first of the month. And these retail stores also are empty right along with these malls. And we know the American consumer loves to spend, but they have maxed out all the credit card debt. And it's only going to get worse, and that's the reason why we're starting to see small crime pick up. And remember, the crypto teacher told you. And like Trump said, trillions and trillions of dollars are going into AI. And all the phases that Trump is taking America through, the American people are distracted on things that don't matter. They don't ask questions on why. Something has to be going on with Bitcoin. Trump is in Bitcoin. Trump is in mining. Trump is in DeFi. He's pushing AI. But of course, the sheep sleep and the NWO builds. And remember, the crypto teacher told you. Because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Even if the tariffs went no further than right now, to what extent are supply chains already being scrambled?
Oh, they're definitely already being scrambled. I mean, if you think about it, when the tariffs went up, retailers had already placed orders that were coming in, and some were on ships, some weren't on ships. They're now, as Anna said, placing orders. So you're talking about retailers, and also, if you think about it, over 50% of what the U.S. imports are actually inputs to other, like manufacturing. So those supply chains have been scrambled because those costs are going to be dramatically impacted if those products are coming from China. For a period of time, the tariffs went way up. From inputs from other countries. Those now, the president said, will go up in July. That certainly isn't enough time for companies to readjust, major companies, major manufacturers, to adjust their supply chains. And for small and medium-sized companies, they are just dead in the water. Are their margins of sales sufficient to make it worthwhile even to pay the tariffs when their products land?
Of outbound freight out of China into the United States. It is really dark times for ocean shipping, especially, but it's starting to actually show up in domestic markets. To your point, people bring me out when we have a crisis. People oftentimes don't think about the supply chain unless something's breaking, and we're certainly looking at similar conditions to what we saw in early COVID.
What are the differences? In other words, no one's hoarding toilet paper right now, as far as I know.
No, there's no toilet paper crisis, and we don't anticipate a toilet paper crisis this time around. But you are looking at softness that's showing up. There's so much uncertainty. This is slowing down investment. So that is slowing down companies making capital investments. That slows down freight. Supply chain shortages will probably show up sometime in late June, July. And I think when consumers will feel it, will be most likely back to school when they go to the stores and don't find the items that they're used to buying for back to schools, when those will start to get pinched.
Sticking with the consumer, we got that bad data this morning. It was the final sentiment reading from the University of Michigan, which was a little bit better than the preliminary, but still the lowest since July of 2022, and the fourth straight down month. Inflation expectations came in at 6.5%, near their highest level in more than 40 years. Joining us now is the University of Michigan's Joanne Shu. She is director of the surveys of consumers, and they have been really bad. Joanne, there's no other way to put it. Any glimmers of hope here?
Telling us that there are warning signs in the economy on multiple dimensions. Consumers are worried about business conditions. They're worried about their personal finances, unemployment, inflation, basically all of the above. And most concerningly, consumers are worried that their own incomes are not going to grow that fast over the next year. And that could be one reason why they're not going to be able to sustain the high levels of spending that we saw after the pandemic.
The only kind of positive spin I can give to this is one I heard from market participants, because obviously I've written a lot up this data with a lot of interest, but they would say, look, these surveys are so bad. I mean, we were talking about basically the lowest readings ever recorded since this began in, I think, the 1970s. They're so bad they can't get any worse. Do you think there's some truth to that the shock is now fully manifested, and maybe in the months to come, as the markets settle down, the rhetoric settles down, that we start to turn a corner?
Consumers are very much telling us that they're really worried about tariffs and really worried about the uncertainty and volatility around tariffs. So if tariffs resolve in the upcoming weeks, that could very well stem the bleeding in terms of consumer sentiment. But right now, consumers just perceive so much uncertainty. They are fully aware that businesses are having a lot of trouble planning, and they're having a lot of trouble planning in themselves as well. And given that consumer spending is 2/3 of GDP, if consumers are unwilling to spend, that does not bode well for the aggregate economy.
They say liquidity in Treasury and equity markets was low and got worse in April, but they also say in the report that market functioning remained orderly. Now, total debt levels for households and for businesses remain low as a share of GDP, but indicators of business leverage, they say, are elevated. Private credit continues to grow, and the report says that a sustained decline in earnings could put some vulnerable business borrowers at risk. Delinquencies on both credit cards and auto loans also both remain above their pre-pandemic levels. Now, the banking system, they say, remains sound and resilient overall, but some banks do have concentrated exposure, they call it, to commercial real estate. Hedge fund leverage is also at or near its highest levels since 2013. And finally, John, a New York Fed survey of market participants, academics, and some others that's released as part of this report, it shows a 40-point jump in the share of respondents citing risk to global trade as a potential near-term risk to the financial system. There was also a 10-point jump since the fall in the share citing Treasury market functioning as a potential risk. Now 27% are saying that could become a vulnerability.
This train has left the station. I think there's no stopping it. But there are geopolitical kind of ramifications of what is happening. And so, you know, there are impacts of that on this AI trade.
When you say that the train has left, these companies are resolute, they're not stepping away from their investment, that suggests that the AI theme, in terms of this build out and these companies' determination to fund it and race to wherever they think they're going, that's intact. I guess the bigger question is, are investors giving them credit for that? Are investors being more demanding about knowing exactly how this is going to get a payback?
Of course, there. Investors should always be asking how they're going to get a payback, and but one of the things that I think is lost on some is that some of the spend is existential. Google must spend. It doesn't want to spend. It has to spend. And you go down the list of spenders for AI, there are a lot of have to spenders that will continue to spend over the next 3, 4, 5 years because they can't miss the boat on AI because it puts their core business at risk.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting at more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Cryptoteacher and the new Road Auto book, plus the 3 kids books. It's time to re-educate. Also, if new to cryptos, Coinbase, Bitrue, Binance, do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.